Welcome everyone to the market review for May 17th, 2023 of the E-mini S&P futures contracts. I'd like to welcome you to the channel. I want to start by saying this is educational. This is in no mean a signal service. This is not a encouragement from me for you to go in and enter trades following watching this video. This is mostly just for me to further my learning of the ICT SMC concepts. I've been following ICT for about 18 months now, and I still demo trading, but I feel like these videos would help my psychology and also just the overall confidence of entering trades. And so with that, I want to get started by reviewing the daily chart. As we look at the daily, the first thing we want to do is look and see where have we come recently from, which liquidity has been taken. And so what I do usually is I come in and I'll mark up the range. We have buy side liquidity there. Over here we have sell side liquidity. And the first thing you notice is that sell side liquidity was taken on May the 4th. So following sell side liquidity being taken, what we're going to look for then is buy side liquidity to be ran or some level of PD array in the premium side. So what we want to do is to place a fib on the range. This impulse candle, the day after sell side liquidity was ran up past 50% into the premium level. On the premium side of things, we always look for sales, even though we still haven't reached buy side liquidity. So what you can notice is after this impulse candle, we had 7 or 8 consolidation days where price didn't really move much. But yesterday's candle, what we have is it closed down in the discount area. When price is in discount, we're looking for buys. And since our overall bias is for buys, that's what we're going to look for today. So let's move down to the hourly chart. Before then, let's remove Fibonacci. So now that we're in hourly chart, what we want to do is start our replay, start printing candles. When the opening candle of the day is printed, what we notice is we have a new day opening gap of from 41.26 to 41.27.5. So we have about a handle and a half new day opening gap. When listening to ICT, he mentions that if you have anything more than 2 ticks or about half a handle, then you want to pay attention to that price range, because for the next trading day and possibly throughout the remainder of that week, this range is going to be a magnet for price, and price is going to want to re-enter. And then from there, you want to look and see how it reacts. Now that we have our new day opening gap, what we want to do is move into the following morning when we get to the time frame where we want to trade. Myself, my personal time frame to trade is between 10 and 11 a.m. That's the time frame that ICT refers to as the silver bullet. And the silver bullet is where you can look for a setup daily, or at least 3 to 4 days a week, where you can get 5 handles from a trade, which should be plenty to be not only profitable, but a full-time trader with multiple contracts. So let's get down to 9 o'clock. Okay, now it's 9 o'clock. What we want to do is let's drop down to 5 minute. We're getting close to the time frame where we want to trade, so we want to start looking at price a little more closely. I checked, and there isn't any news today, so I'm not expecting a huge price action or any type of huge impulse candles at 9:30. There could still be, because that's the New York opening bell, and price tends to be a bit more volatile in that time frame. But the time frame that we want to trade starts at 10 o'clock. So what we want to do is advance to just before 10 o'clock, 10 minutes before the hour and 10 minutes after the hour. There's a macro that runs where price moves to a specific level, looking to set up the next hour. So let's advance to 9:50. Okay, went a little too far, but either way, we're at 9:55 now. What I want to do is drop down to the 1 minute. Actually, you know what? Let's go back to 5 minute. While we're at the 5 minute, what we want to do is let's mark up all of our sell side liquidity, because remember, we're looking for buys. And before you can get into a trade for price to turn around, first price will need to take out liquidity, and it would need to hit a PD array, which forces price to turn around. So I've identified these swing lows as sell side liquidity. You can see the first one's already ran between 9:50 and 9:55. Actually, the first two have been run. We still have our new day opening gap, which is available. Price hasn't entered that zone yet. And then we have our swing low down at 41.22. Let's move down to the 1 minute chart. And since we trade the silver bullet and we only look for trades between 10 and 11, I'm going to now fast forward to 10 o'clock, which is the first moment where we would like to enter in a trade if the setup is available. Okay, now it is 10 o'clock. And what we see is not only has price taken out these two sell side liquidity levels, but it's also entered in a new day opening gap, fully trading down to the bottom of the range and closing at the top of the range. Now that it's 10 o'clock, we're looking for a trade. To get our trade, what we need first is a market structure shift. And then after market structure shift, we need a bullish fair value gap be created for us to enter. So first thing I notice is equal highs, these two values. So we're going to look for those equal highs to be taken out as our potential market structure shift. And remember, it's only 10 o'clock. The macro finishes at 10:10, so we still have 10 minutes left, even though we're looking for a trade. But what that means is that we could potentially enter in the trade during the macro time. Okay, we have a market structure shift with impulse through our equal highs. Now what we're looking for is a fair value gap, a bullish fair value gap, and then a retracement into that fair value gap for our entry point. Okay, still no fair value gap. Okay, you may notice here, we just got a fair value gap. But this is a bearish fair value gap, so this is not the one we're looking for. But I just wanted to show this to you because some people will notice the first fair value gap they see and they think that that's where they want to enter into a trade, even though we've already discussed we're looking for buy side liquidity as our next target. As you can see, the very next candle traded through that bearish fair value gap and closed above. We continue on, and here we go. Now we have a bullish fair value gap created. Let's change the color. Now that we have the bullish fair value gap, we had our market structure shift already. Now all we're waiting for is price to trade back into this range, into this purple shaded area, and that's where we want to enter our trade. And we want to enter at the very top of the range. It's a small range, and we want our stop loss as a minimum below the swing low. But ICT recommends 5 points or 5 handles. So that's a 1-to-1 trade. Personally, I'm a 1-to-2 trader, so I would be looking for 10 handles in this trade. But what I want to show you now is just the TP1 if you just want to take 5 handles and move on to the next trade. We can see price has respected our entry area. It did wick below slightly, but the closure was in this fair value gap. That's what we want to see. And here we are at 10:26. So 8 minutes later, we enter our trade is over. We closed it at a 5-handle profit. But since I'm more aggressive and I like a 10-handle profit, we'll carry on. But if you're going to move on to this 10-handle target, what you want to do once 5 handles is achieved is you want to move your stop loss up to break even, which is your entry point of your trade. Therefore, if price comes crashing down, you leave with zero. You didn't lose anything, you didn't gain anything, but you preserve capital and you're ready for the next setup. So let's continue on and see if we reach the 10-handle target. There you have it. Ten handles was achieved at 11:17. At the same time, the swing high was also broken. So if that was your target, the same candle would have ended your trade at either 10-handle profit or as high as almost 13, 12 and 3/4. So there you have it. This is the silver bullet. Again, it's between the time frame of 10 and 11 a.m. We look for sell side liquidity to be taken. We then look for market structure shift. After the market structure shift, we need a bullish fair value gap to be created. Once price re-enters the fair value gap, we enter a trade at either 1-to-1 or 1-to-2. And as you can see, both of those trades were winners today. And if you enjoyed this video, I ask that you subscribe, click the thumbs up, and leave a comment. You know, what you like about it, what you didn't like about it. I'm fairly new to this, and again, I'm doing this mostly for my own confidence to continue my trading journey. But if anyone else is also an ICT student or just discovering ICT, looking into smart money concepts, hopefully this was also helpful for you. And with that being said, I thank you for watching, and until next time.